I would say that the Nordic market offers great investment opportunities in general, and especially for credits, which is my focus area. Overall, the Nordic region is characterized by very low corruption, high transparency. We have a lot of globally world-leading companies in many sectors, which also are extremely focused on having sustainable businesses, which we believe will be a core competitive advantage in the future. And that is also why we at Carnegie Funds is focusing a lot on the sustainability aspect when making investment decisions. And from a credit perspective, the Nordic region offers good diversification. If you look at the region from an outside perspective, you might think of it as one unit, but it actually comprises 5 different countries with different currencies and totally separate monetary policies. And within each country, you also have different sector exposure. In Sweden, we have a large real estate and financial sector and a sizable industrial sector as well. Norway is more about oil and offshore, fish farming and shipping, whereas Finland, you have large material and industrial sectors. Lastly, and most importantly for a credit investor, the Nordic region also offers higher credit spreads for the same credit risk versus other credit markets like the European market. And over time, you get this pickup in the Nordic region due to a couple of factors. First, we have fewer publicly rated companies with ratings from companies like S&P, Moody's, and that is especially true for the smaller high-yield segment. We also have local currencies, which naturally excludes a lot of global mandates focusing more or less on euro and dollar. And the Nordic region is also a smaller market. Not as known by global investors as you might think. But just to give you some comfort on the size of the market, it's not tiny, although being a lot smaller than the European market, for example. Last year we actually had 185 new high-yield issues, so smaller but not as tiny as you might think. And lastly, worth mentioning that a lot of Nordic companies also issue bonds in euro and dollar to some extent as well, meaning that through the Nordic issuers you can also get an exposure to the European market if you want to. So why do we only focus on the Nordic region? For us it's really simple. Focus on what you know. This is our true belief, and we also think that it will drive performance over time. I mean, with the Nordic region being a smaller market, it is definitely an advantage to be a local player, being able to meet with all the companies and other market participants. You know everyone. And for us, as one of the larger players in the region, we also get to take part of early transactions, meaning that we get to give early feedback on pricing and structure in primaries. And we are also very often favorably allocated in the deals that we want to invest in. And it's also very important to be a local player in order to have the extra feel for where secondary trading should be priced in terms of individual bonds, which is especially true for the smaller high-yield issues. And we also think that you can get a decent diversification from a broader Nordic portfolio and to some extent from single individual companies as well through their global business. And lastly, I would like to summarize our view of the Nordic region. I think it offers great potential as perhaps a smaller part in a broader global portfolio. I mean, in the Nordic region, you get globally well-known, world-leading companies at a higher spread compared to many other markets. We also have a large universe of floating interest rate notes, meaning that the interest rate risk is much, much lower compared to many other markets. On top of that, the Nordic primary market tends to favor shorter and mid-dated bonds, meaning that we are less vulnerable to large market movements. We also have a large focus on sustainability, manifested by a very large and increasing universe of green bonds, which also adds to liquidity actually to the whole market in the Nordic region, since a lot of new green mandates and pockets has emerged. And lastly, I would say that the Nordic market is not as affected by ETF flows as the European, making it less beta-driven, which also is very, very good for 2020, since 2019 was such a strong year, and here in the Nordic region we actually have some yield left in our bonds.